I'm Mona Corey, owner of Tucson Tax Team and an enrolled agent, licensed by the federal government and an expert in taxation. I also own real property in Rocky Point, Mexico, and I have firsthand knowledge on both the U.S. and Mexico tax requirements. I've made a series of videos about this topic, and I hope you enjoy them. 1.3 million Americans bought second homes in 2014, and 40% of those were in beach locales. So Rocky Point, Mexico is a popular second beach home destination for Americans. On the U.S. side, there's not a lot of deductions you can take on your second home. You can take your property taxes, you can take qualified mortgage interest. But unfortunately, the bulk of your expenses, your operating expenses, are not deductible. Can't take the HOA fees off, can't take the insurance or utilities. That's something to keep in mind. One of the things you should be doing, though, is making sure any improvements or renovations that you are keeping all the receipts, because when you go to sell that second home, it's possible you'll have a taxable capital gain, and that can reduce the amount of tax you're going to pay. One of the lesser known things that you can use for your second home, though, is it's called a 14-day rule. The IRS says that you can rent your personal residence for 14 days a year or less and not pay any tax. In fact, you don't even have to report the income on your tax return. So this is a great idea if you have a vacation home, because you could take the two largest or the busiest weekends of the year, rent out your place maybe to somebody you know, so that you don't have to worry about damage to your property, and pocket that money and use it for operating expenses through the year. If you rent your property for more than 14 days, well, then there's some other complicated tax rules, and we actually have another video about that topic. When you buy a property in Mexico, it's really important that you understand Mexican law. Mexican law states that foreigners cannot own property within 30 miles of the beach. So if you want to own a property that's right on the ocean, you're going to have to buy it through what's called a fideicomiso, or a bank trust. These fideicomisios are a 50-year with a 50-year renewable, so they're good for a long time, and the fees are based on your purchase price. So each of the local, state, and federal Mexico entities are going to have taxes, and they're all based on your purchase price. Once you get your fideicomiso, don't forget to make your annual trust fee payment to the bank, because the late fees can be very expensive, and we've heard cases where people haven't paid for many years and are in jeopardy of losing a fideicomiso that they spent good money to get. Once you get your fideicomiso, though, you own that property. Bank's merely holding the deed. You can sell the property, rent the property, make your decisions when you go to your HOA meetings. It's 100% yours. In fact, the U.S. government in 2013 ruled that fideicomisos are not foreign trusts. They're merely ownership documents. One other thing that we should worry about is the master trust, or explain to you about, is the master trust. The master trust is used by a developer when they're building a property. They put all the units inside the master trust, and those units are sold and paid for. They're kind of extracted out of there with their people either get deeds or fideicomisos. But while your property's in that master trust, if the developer's sued, there can be some ramifications for you. So we highly encourage you to get your own personal fideicomiso in your individual name, and that's your safest form of ownership in Mexico.